Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a morning quick start video where I take a look at the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So it's it tight. I'm going to start off by taking a look at the hourly chart of the euro versus US dollar. And what we know about this currency pair is we've been trending more to the downside here. The last 1, 2, 3, 4, 5, 6 days have seen the price steadily move to the downside after peaking up here on, I guess that was, last Wednesday's trade, and then moved sharply lower, kind of sideways on Friday, Monday lower, Tuesday lower, and Wednesday lower in trading here this week. So what we've seen is that the market break below a key level at the 1.0610 level, there, right up here. Where the price fell below that level, and the importance of this 1.06106 level needs to be seen off the daily chart. If we go to the daily chart and take a look at the low price going back to September right here to the high price up here, the 38.2% retracement of that move to the upside comes in at 1.06106, and hence the importance of that level. Going back to the hourly chart, you can see that when the price fell below that level in Monday's trade, we came down to 105.74, and then sort of sideways it's swaying. And in trading yesterday, what did we do? We rallied up, and at around this time yesterday, I was talking about the 1.0610 level up to 1.0616. That was this low right here as the resistance. And lo and behold, the price got up to about 1.084 before rotating back to the downside, closing near its lows. And in trading here today, we've seen further selling pressure. So key resistance held at the broken 38.2% retracement, and we continue the trend to the downside. The 1.05338 level doesn't have much of a significance. Well, it does. Taking a look at the daily chart, that low here today reached down to the high of this swing area right through here, where we have a number of different swing lows here forming a ceiling. Then we've sort of based here, moved higher, and further based at this area right here, setting the low of this area right through here, and then found support buyers here before moving to the upside, and we've returned back to that level in trading here today. The low price today reached the high of that swing area. We've been talking about it for a while. Also, we have the 1.04846. That's the low of this swing area going back to this area right through here. So the next hurdle for the sellers is to get into this yellow area and work its way toward the low of 1.04846. But as you can see, we are starting to find a little bit of buying. We currently trade at 1.0542, just about 9 pips above that level, but keep that level in mind for today. Let's take a look at the 5-minute chart, just get an idea of this. And if we take if we look at the price action today, we sort of went sideways and then started its way to the downside. I'm going to put a little Fibonacci from this high to the low right here, and traders might watch this 38.2 to 50% retracement level as a resistance area. This 50% comes in at 1.0553. It's near the low price that we saw in the Asian session. So watch that area near here for resistance on any sort of rebound to the top side. But once again, if we get below the 1.0534 level, it starts to enter into this swing area off the daily chart. We'll look for lower levels, perhaps down to 1.0484 before it starts to find some support buyers. Let's take a look at the dollar versus yen, and this currency pair is up for the 1, 2, 3, 4th day in a row, trading near new highs as we speak. The high price came in at 149.24. We're currently trading at 149.20. Let's see, if I put a trend line in here, we can see that the price moved above it and traded above and below it here through here. So it would take a move below this level with more momentum to increase the bearish bias in the dollar versus yen. Also, perhaps watch near the closing level of yesterday to see if the bias shifts. That comes around the 149.03 level. If we break below that level, then the 4-day win streak is over, and we could see further sign to the downside. Let's take a look at the daily chart. On the daily chart, we have the price testing the topside trend line like it did yesterday. That trend line was developed through here off these daily highs through here. and we came up and tested that level yesterday, and today the level is higher, and that price is also testing that level as well. So keep that in mind as trade as the market trades today. If we move above that level, it opens the door for further upside potential. Let's take a look at the sterling versus US dollar next on the hourly chart. This currency pair has been down 1, 2, 3, 4, 5, 6 trading days in a row, but today's trading day, although lower, is more up and down and a more narrow trading range. As you can see, we moved into a swing area here. If I go to the 4-hour chart, spread it out here, and go back in time to this area right through here. Here you can see, or actually right here, you can see where that level is developed, going back way back to the month of February, March through here. So we are testing that level, but the sellers certainly are in more control in this currency pair, like the dollar versus yen. If we were to trade, let's say, in positive territory today, we closed yesterday at 1.21559. That might tilt the bias back to the upside in trading today, just because we've had this string of days to the downside for this currency pair. So watch that area up through here, where if the price moves above that level, that would be more bullish. Above that, we'll look for just a rotation to take out the high for the day, and then maybe this topside trend line on the hourly chart. So there you have it, a look at some of the major currency pairs as we kickstart your trading day from a technical perspective. My name is Greg McGlosky. Good fortune with your trading. Bye-bye now.